What's up guys, Crypto Noah back with another video. In this video, I'm going to show you the exact formula on how you can generate $5,000 per week in passive income via yield farming. So in this video, I'm going to break down what yield farming is, the best way to go about yield farming now that we're in a bull market, I'll show you the formula, how you can make 5K per week. And at the end, I'm going to share my advice on if I think that should even be the goal. Like, should you try to make $5,000 per week? If not, how should you go about it? It's gonna be a good video. Grab a drink, kick your feet up and relax, and let's jump straight into the content. After I say, none of this is financial advice. These are my own perspectives, research, and it should be treated as such. So without further ado, let's jump straight into the video, starting off with what the hell is yield farming? Yield farming is nothing new. It's actually market making. And every market needs someone to make a market so that traders can have liquidity and be able to trade back and forth. So you have market makers in stock markets, bond markets, commodity markets, forex markets, crypto markets, precious metal markets, literally every market. So when you go and buy your stocks on, let's say, Robinhood, it's not Robinhood that's holding the Tesla stock. It's actually the market maker that's saying, hey, here's 50 million in Tesla, here's 50 million in cash. Only use my liquidity when the price is between X and Y, concentrated liquidity. They profit off of what's called the bid to ask spread, aka the trading fees that you and I pay when we go and buy our stocks. So the brokerage or the exchange is just the middleman between the investor and the market maker. Without market makers, there would be no liquidity. We wouldn't be able to invest. And believe it or not, market makers make the most money in bull markets, bear markets, especially sideways markets, because they make money passively off of volume. And you make volume when prices are going up and when prices are going down. So for the first time in history, everyday people like you and me can be market makers in crypto on what's called decentralized exchanges. And the cool thing is, these major financial institutions that's doing the traditional market making, like Credit Suisse, Citadel, Deutsche Bank, Morgan Stanley, Goldman Sachs, probably BlackRock, they're not legally allowed to do market making in crypto just yet. So you probably want to learn this skill as soon as possible, because it's not going to exist in this capacity forever. Eventually, they're going to be granted the regulatory green light. And this is the best way to generate passive income from a risk-adjusted basis in the history of mankind. And it's not even close. We were never able to do market making. And there's not a lot of content on it because it was just exclusive to those banks and institutions. So in crypto, you can take your crypto, let's say ETH and USDC, and say, hey, I think ETH is going to trade between the price of 2K and 5K. You can provide liquidity within that range. Anytime you're within that range, you're making passive income. The amount of passive income you make is dependent upon two things: the volume to TVL ratio, aka if it's more volume than there is TVL, you're going to make more passive income no matter how large the TVL is. And then how much you make up in the pool. So let's say that ETH USDC pool has $100,000 in it and you deposit 10K, your liquidity makes up 10% in that pool. So you're gonna make 10% of the trading fees. So now, what's the best way to yield farm now that we're going into a bull market? Well, volatile pairs are the best pairs to provide liquidity for in bull markets. So Bitcoin, Ethereum, these are two volatile assets versus doing ETH and USDC. Now, ETH and USDC is great, but you have to know what you're doing. If I were to do that, which I am, and I made a video on that, my ETH ETF trading strategy, I'm using the liquidity pool as a way to take profits, right? I'm expecting to go out of range quickly, or not even quickly, more quicker than I would be in a volatile pair. When you have a volatile pair and both of them are rising, you have a higher likelihood of being able to stay in range, right? And in bull markets, if ETH is mooning, chances are other altcoins are mooning as well. And just to show you what I mean, here we're on Uniswap. We're at top pools. Let's hit Bitcoin, ETH. Once the bull market ensues, the volume is going to pick up. So you can see in May 2021, you have volume in the hundreds of millions, like on a few days. We were at 314 million on this day. This is the highest, but 65 million, 80 million. And now, as we went into the bear market, you see the volume's low. This was like the depths of the bear, 6 million, 1 million, 2 million, 1 million, 4 million. And now we're starting to increase $100 million days, $54 million days, $60 million days. And as we go past the Bitcoin halving, if we get an ETH ETF approved, this volume is going to soar. And it's like selling shovels during a gold rush. You want to get ahead of the volume before it comes. Because what's going to happen is once market mania kicks in, the centralized exchanges are going to get backed up. People aren't going to be able to get approved fast versus being able to spin up a MetaMask in 5 minutes and go on a decentralized exchange and purchase an asset. You want to have your liquidity before those people come. And I can tell you one thing, people are going to be buying much faster than liquidity providers are going to be providing liquidity. You want to have your ranges set beforehand. It's the same thing in life. You don't build a boat when the storm is here. And you don't prepare for war when your city is getting raided or when your town or nation is getting raided. You do that beforehand. It's the same thing here. So guys, you've seen me make many yield farming videos on this channel. I've talked about many of the pools. And right now, before things are getting extremely crazy, I'm averaging around 250 to 300% APY in my pools. If you want to get access to the pools and things that I don't talk about on this channel, and you want to learn how to deploy the same market making strategies that institutions have been deploying since the 19th century with professional coaches and an elite community, click the link in the description, book a free strategy session. You'll either talk to me or one of our coaches. We'll answer any questions you have on yield farming, kind of help demystify it for you, and see if our program is a good fit for you. We have a flagship course, in my opinion. I think it's the best passive income yield farming course on the market, and I say that confidently because I've been through all of the good ones. We'll see if our program is a good fit for you. If it's not, we'll point you in the right direction. And we like to keep the lines of communication open because you never know what can happen in the future. Now, let's get back to the video. So as you can see in this Maple ETH pool, 235% APR right now. I've been in this pool for 43 days. Average daily fees right now is a little over $100. I have 16K in the pool. When I deposited, it was 12, so I'm already up over 4K in principal. You can see that I've already collected over $5,000, and it's a little lower than that right now, but at prices when I withdrew was much higher. You can see since I withdrew, I have over $300 in rewards right now, and I just claimed them the other day, and I'm up 14% total. That's my wider range. I have a more narrow range with less money. You can see I'm getting 293% APR on this one. Now, let's go over the exact formula on how you can figure out how to generate $5,000 per week. It doesn't matter what pool you get in. Well, it does matter, if you want to win long term. Don't just LP for a shitcoin because you see the yields are high. But here's the formula. Let's say you have $100,000 to provide liquidity with. And let's say you get in 250% APR. That totals out to $250,000 per year. If you divide $250,000 by 12, that's $20,833 per month. You divide that by 4, and you're making $5,208 per week. And guys, what I can tell you is that right now my average APR is around 250 to 300%. I didn't even show you all my pools, but in the bull market, when the volume is going to increase 3, 4, 5, 6x, there's going to be certain days where you're making quadruple digit APRs, and that average APR is going to go up substantially. So while you can make 5K per week getting 250% APY on 100, if the APY increases by 3x, that's how much less you need to provide liquidity to get that same amount. So now, should your goal be to make a certain dollar amount per month? I hear people talk about all the time, like, oh, I want to use yield farming to replace my job and make passive income, da da da. It is possible, especially the more money you have. But if you don't have a lot and you're really trying to grow your portfolio and build up, it's not what I would recommend. Even though you can do it, it's just not my cup of tea. The better approach would be to select your ranges intelligently and go about setting your strategy intelligently. Find an asset you want to accumulate. Never provide liquidity for any 2 assets you wouldn't mind holding on its own in case it goes out of range. That means no shitcoin pools unless you find the next Shiba, then hey, good on you. Hit me up. Let me know too. But find assets you want, you're bullish on. Find out where most of the tradings happen. You have to understand technical analysis so you can intelligently set your range in regards to where you think the market's going to go. Know how to manage it. Know what you're going to do if it rebalances, if it goes out of range to the upside or the downside. And like I said, we teach you all this stuff in our course and within our elite community. Know what else? And then the yields will follow. And all the pools that I'm in, yeah, I do back test it and see like, okay, had I been in this pool on this date, how much would I have made? It is important but the past doesn't guarantee future results, especially as we're going into a bull market and you're expecting prices to rise. I do that, and I'm always getting really good yields with a pretty fairly wide range. The narrow ones are pretty crazy sometimes, but I'm never just like, ooh, I want to make this dollar amount. It's kind of hard to do that anyway. Like, you might exceed it, you might go lower than, but I feel like going about it in that way makes you a little more risky. Like, don't chase the money, chase the skill, and the money will follow, or the yields will follow. So with that, I like to conclude this video. Guys, if you got value, drop a like, subscribe to my channel and to our Know It Alls channel, where we give you a more macro view of all financial markets pretty much. But with that, I thank you so much for tuning in. I love every single one of you, and I'll see you in the next video. Take care and trade safe.